I mean, we are seeing maybe something happening on Greece, but that's sort of dragging out. But we're not seeing much of a feed through to the U.S. today on that in particular. I mean, the VIX is not implying any increase in volatility right now. So what are people looking for?
Well, I mean, two things. So a lot of managers are positioned for a quiet summer, which is fair enough. I mean, seasonally, this is the time to be quiet, time to be short vol, short gamma if you're going to be positioned that way. But, I mean, we put a note out this morning looking at the state of the volatility market. A couple things I noticed. Although the VIX is low, some a little more nuanced, some more esoteric measures of implied vol are still very high. So the cost of VIX options, the spread between variance swaps and listed implied vol, and also the skew in index options are all higher than the summers of 2013 and 2014.
Oh, interesting. Okay.
So that's evidence for a persistent bid for a premium that I think puts a floor under volatility markets. And it may make protection actually a little bit cheaper, a little bit better value than it's been in recent years because of that persistent sort of bid under the floor.
Gotcha. I want to look at something that is an impending event also that we're watching for that's probably going to happen in the next week, which is a Supreme Court ruling on ACA, the Affordable Health Care Act. And that has implications, obviously, for the industry. So you're looking at the ETF that tracks it, XLV, which coincidentally we also talked about yesterday, I believe, with Kevin Kelly. What do you think is going to happen here? I mean, do you, as an options trader, do you even try to handicap the outcome of the ruling, or how do you figure out what to do?
Right. I mean, I have my biases like anybody else. I feel like if the court strikes down tax subsidies, it seems like it would be a victory of sort of literalism over prudence and intent. That said, whatever you think of the policy, if the court does kind of move against the administration, I think that could inject massive uncertainty into the markets. Conversely, if they rule in favor, if they keep ACA as is, that removes a lot of confusion. It maybe gives equity analysts higher confidence in their multiples and clears the way for a move higher. So I think there's room to position for a lot of gamma for a big move either way. And if you want to do that, I took a look at the options this morning, and XLV premium, even for those far the money strikes, was priced pretty inexpensively. So I think a strangle, which I have queued up, it makes some sense here if you want to kind of trade ahead of potential movement. And in the July options, the 73-78 strangle, so buying both of the 73 puts, 78 calls, cost about 46 cents this morning. That's seems like a pretty good value way to position for a big market reaction, whatever the ruling is.
So in other words, you're essentially betting that it's going to move big one way or the other, that it's not going to stay little change. So that way you don't have to take a position necessarily, although your bias is a little more to the upside.
Right, exactly.
But that way you don't have to take a firm position on which way it's going to go.
Precisely. And in some cases, I wouldn't recommend this if the options are priced pretty expensively. It just so happens right now that with this summer calm, I think a lot of people are pricing the markets a bit quieter, so it opens up this opportunity.
Very, very quickly before we go, you've been watching the home builders today, as have we. Lennar going higher after its earnings beat estimates. What are you seeing options-wise with the home builders?
So Lennar, after that great release, the option market just got crushed. Implied volatility came in sharply, as you would expect when the stock shoots higher like it has. The fundamental outlook for housing is just fantastic. This is a case not of continued recovery, but of actual expansion and growth. Millennials are kind of who knew that they'd want to live in houses and not just rent forever. Household formations picking up, lending standards are improving, so all signs point to continued expansion. The only kind of potential dark cloud is that there's, I think, arguably less room for price appreciation here. As these are sort of marginally younger buyers, it means that price increases that move too fast, too far, would potentially kick people out of the market.
Okay.
But otherwise, builders look great.
So super quickly, so you would take a bullish stance then on the bullet?
I think so, yeah.
Okay.